Okay, so I'm back on a real computer. And looking at the Bitcoin here, looks like we're ready to make a possible thrust down. So this is the channel that I built a couple weeks ago. And look how it came up and touched that channel. Now, I don't know. It doesn't have to touch there. It just happened to move there. Maybe this is all random stuff. So would it matter if this was calculatable? If Fibonacci really worked, does that mean that the market just by happen chance stopped there? Or because you have to believe if you believe in fractals, that inside of each price pulse is the next magnitude with the wave count that'll fit inside that. Any Elliotician would understand that wave 3 could have a ton of waves in it because it's such a long wave. And these extensions are nothing more than viewing the fractal from a smaller degree, right? So you're really down to this the stairway within the stairway, so to speak. Because there's if you took the contour of the say you're looking at the edge of the water up the coast of California, there's certain little coves there that would fit, but as certain magnitudes of drill down, you're going to come across the exact same things. That's why when you look at a 4-hour chart, it may look like a 1-hour chart or a weekly. You can't tell kind of what time frame you're in. For instance, this Bitcoin, I don't think you could tell. Maybe you could. I couldn't tell so much if this was, it looks like a great 1-hour chart. So I go to the line chart and see, we didn't really touch close there, but we did pierce that price. We just came up and turned around there, I guess. Actually didn't close. It closed hard up. So Bitcoin to me is in wave 4. Anytime it's in a drift, wave 3 is the biggest wave, and this is wave 4 on a weekly. It's about the best fit, I guess you could say. How do you know? The question is, how do you know you're in a trend? So somebody was talking about trends in the comments, and they said, well, is this a trend? By the time you discover a trend, maybe it's over. Do you want to get in before the trend? Range breakout traders are getting in before the trend. Because once the trend takes off, and everybody agrees it's going up. Now what is the rate of going up? Is it going up in 3.5 hours? It went up for 3.5 hours and you could have jumped on the 15-minute train. In other words, if there was one pullback on the 15 and you bought every pullback or every pull up, whatever you want to call it, on the 15. So somebody once again is talking about this fucking footprint shit with this level 2 garbage, which is just so hilarious. It's like if I could see the harmonic scan of the chords you're playing, is that going to change my guitar solo that I'm playing on top of your chord changes? No. Is it fun to look at the harmonic content in a spectromatic chronograph rater? Oh yeah. Does it look pretty on the screen? Oh, it looks not only does it look pretty, it looks very importante. This is the attraction to this level 2 shit. I should just do a video donated to beating up on level 2 traders. Only because I'm disturbed by numbers. It's bad enough I got to trade price and do the math on that shit. It's like if I saw a girl with a nice ass, do I really need to get out a fib tool to say, that's a golden ratio. That's the height to the width to the, and I think that's what people really have, this utopian view of trading. Man, look at this thing, the moving average. Okay, it all comes together. It's a perfect setup that you would call, typically this is referred to as the confluence, you've got top become a bottom, you've got top become a bottom purely horizontal. The market's not too erratic. There's no news coming out. I mean, you're talking about, let's go sailing on a nice day. Okay, yeah, that dream wave. But this just doesn't happen very often. These kind of that's why they call it, well, the honeymoon's over. Wave 3 is the honeymoon. Or no, wave 3 is the first time you're getting laid. So, I guess, frankly, it's the orgasm. And then, of course, it's a relationship where it's just wonderful. And I think the end of wave 3 is you get married. Well, for me, every time. Wave 3 is right up till the wedding. Wave 4 is consolidation. And wave 5 would be, if the end of wave 4, you got divorced or the person died. Because now it's going to start, and then inside of wave 5 would be a whole nother progression of the 1, 2, 3. So there's always a wave 3. So when I started doing Elliott Wave, and I was like, well, which fucking, am I going to be on the 5 minute, the 1 minute? And I thought, well, fuck that. I'll go on the 2 minute, the 3 minute. Now, you can see the progression. You could stack up charts and go, well, you just get MetaTrader 5 out. Just find a broker that runs MetaTrader 5 and just use that for your graphics like people use this trading view. I don't think you can trade on it or whatever it's called. But this is not any hocus pocus stuff. I mean, I'm not... let me find the comment here. Yeah, come here. The guy that said to me, level 2. I guess I should just call this level 2 trading because it's still getting people talking about it. Like I said, it's not like it's not cool to look at all that data, but of what consequence is it? I gotta restart my browser. So yeah, I went on vacation, come back, and the router is reset. I mean, it's like the certificates have expired, and now I got to start a whole new browser to hunt for stuff here. Are you sure you want to do that? Let me see if I can load into it here. It's misbehaving. Let's see. Yeah, so I had to do a video that was just no video. Because I tried to do an audio and upload it, but YouTube wouldn't let me do that. So here's what this guy said to me about
what is the motivation?
When I said, what's leveling the playing field with NOFT. It's just hysterical. Look at all these tickets up in here. What'd you think? I mean, just go to the other time frame. We got 6,100 views on this already. So the latest comment here, and look at the thumbs down. Loving this thumbs down shit. You know you struck a chord. You know you're on the right track. When you get to this, and I think this is the crux of it, and I think this is where I'm offending people because some people want an analog clock and some people want a digital clock. Okay, I want an analog clock. But that's just me. The digital, too much thinking. Hurts me brain. I really have a problem with, I think I have some people, they say dyslexia, I have number alexia. I can't handle it, man. I still got to write stuff down and stare at the numbers and think, is that right? I almost don't trust math, but I trust patterns. I trust what I see visually. So it's a real, I don't want to say it's auditory, but I think it is auditory numbers because you're reading them in your head, 580, 260, where patterns you're like, there's no words. A picture's worth 1,000 words. That's what I mean to say. And I think that is why, but I do go over the board here because I'm just so angry. I could do it more angrily. But I think I was getting too old, I guess. I'm just getting too mellow. I can tolerate a lot more punishment. I don't know. Everybody has their... I think if you're anxious and fit... I always felt like when I went to the gym, that was not a good thing because I came home thinking, I'm strong. I can bust some shit up. Get a couple beers in me. I could actually see how going to the gym creates violence. The trading thing. Oh, this is a head game. This is like playing chess. I mean, how much effort does it take to move a fucking piece on the board? So here we're 9,000 a Bitcoin. How about that? Where's my level 2 Bitcoin chart? So sorry. I want crude oil. I see the gas pump is going up. So I haven't looked at crude in a while. I've been not around my crude chart. But we pulled back off of this, and this is the other thing, was this talking about the vacuum thing. Guy asked me about the vacuum factor. So these are Pacific questions, and we all have these same questions, or we have a version of a question in our head. Now it's the weekend. Bitcoin's still trading right now, but it's the weekend. And I feel like it's a time to reflect on how we should trade next week and all the trades we missed. We have to look for our mistakes now. We have to look back and see the misalignments and the not trusting the market to do the same bullshit it does every fucking week. Go up and down. And did we have a trade plan to jump on the now train at the market? Walk up to your screen. If I had a gun to your head and I said, you must buy or sell in the next 30 seconds, what's it going to be? You're allowed to use a 300 pip stop. You're risking $30. So this is like a game. If trading's a game, then even thinking about trade plans it's a game strategy. So if you have no control over the hand you're dealt and you haven't loaded the dice, what's your alternative? Is to think on the fly and be able to make decisions without caring. And do you care about $30? I would say if I took anybody into the trading arena, I would say, okay, I see you. So I'm at the gas station putting gas in the car because it keeps using gas. What the fuck is with this car? And the lady in front of me. Now, I've been spending some time with somebody who's very impatient. And I thought I was impatient until I met this guy. Holy fuck. So his impatience rubbed off on me, which isn't a good thing. I was already impatient before we met. So he's high strung and intelligent. So here we go. I go to the gas station and get gas today, and I needed some change to put air in my tire because they're still using fucking coins on this shit. Can't swipe my retina. So this lady in front of me is buying fucking lottery tickets. Are you fucking kidding me? And it's so adorable. Why don't you just use a fib tool to call these fucking numbers out? What the fuck? I get the 268 and the 59. And meanwhile, the chick behind the register has this old-fashioned, it's the current fashion. Cha-ching, 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 cha-ching. Every ticket's got this fucking... It's taking 48.5 milliseconds for every ticket to spit out of this thing. I'm like, dude, I got to get air in my tires. I just want to go home. Like, being the most impatient, and so the lady says to me, because she can sense my impatience, she says, is there something I can help you with? And I thought, yeah, you could help me get this fucking bozo out of my face so I can get to you. Like, I hate when people ask over the top of a line. And I sound like that Larry David guy. Okay, I'm sitting there, and you want to talk to me? You're not even done with this chick with the fucking lottery numbers from hell. And I'll say, I want to take people like this aside and go, you just bought $30 worth of lottery numbers. Fuck me with a wet spoon. You should have put on a fucking blind 1K on any currency on the planet and just see what the fuck happens. You might be up $10 in the next fucking day. You just made $10. Risking 30. Now I get that you could tell that person, well, I'll just sit in that trade for a month. Now, they wouldn't even, anybody who's never scalped, okay, if you scalp the market with 4 standard lots, it's a different lifestyle, let's face it, than trading with a 500 pip stop on a 1K and checking it every month. So if you told somebody, I think the euro, like, pick up a couple of euros down there at 108 just for shits and giggles. And where are you at now in that 1K? So you're up $280 on a 1K. You risk $30. If you told somebody it's like a long-term lottery ticket, that's the other thing. Lottery tickets, fucking, dude, you're either going to scratch that thing one at a time every hour, treat it like a 4-hour chart, or you're going to scratch the whole thing like a goddamn, like you just rented a hooker. You just, boom, okay, next. I was watching this guy. He had like 10 tickets he buys every morning. And he's actually kind of like breaking even on this shit. Like, he got a $10 winner. He was up $1 on the fucking morning. And look at the odds on that fucking ticket. You can tell me trading can be any more difficult. Well, the problem is these motherfuckers come to this game with the guy. Oh, yeah, I got like, well, I heard the euro. Well, you know, I just reading the Forex Factory people talking about, well, I think because Europe's having like a blowjob, it's going to go. I'm like, what the what? Well, you know, the Brexit thing and everything. Okay. Is there like, do I just get in anywhere? Well, yeah, with 1,000 pips stop, you're damn tootin'. So you're risking, with this 1,000 pips stop, you're risking $100. Now, where's the spread for you now? How much does that spread matter? Anybody that's trying to make 200 pips, if the spread was 10, you'd be doing good. And that's another thing is when you're on the 1-minute chart or the 5-minute chart, you've got to have your fucking hand on the trigger. You've literally got to be like, and the hand on the pending drop even. You've got to be dropping pendings 3 pips deep, 9 pips deep. Now, this could last for 15 minutes, or you're just going to like put them in, cut them out. You could delete them all. I mean, it's a bottomless pit. You could literally show up to trading and just say, I only place orders for like, I delete them, or I'm constantly moving them. Imagine you got a pending in your hand and the market's moving down, you haven't dropped it yet. Now, this is truly front running the market. There's so many approaches to this thing. You just have to figure what you feel comfortable with. Can you handle driving a manual transmission? Or do you just want to hit the button and go? Now, if you want to hit the button and go, you're probably like, you know what? Just buy here at the market, maybe put one pending in. But if you're going to manual transmission, you're trying to exploit the torque range or power band of each gear. And you probably want a 5-speed manual, where you get 3-speed automatic because, you know, first gear, second gear comes in based on current conditions. It's like a moving average of the power band of that car, but the mileage is always going to be better on a manual. If you look at all the stats, yeah, because you're going to exploit each gear, and plus you don't even have to, if you're only going to go 40 miles an hour or whatever, 25 kilometers or whatever, you just stay in that one gear. So that would be like if you had a trade plan that was designed for like 35 miles an hour. You stay in third gear. You're like, oh yeah, I always run a 10 pip stop to make 30 pips, whatever. I mean, it gets really fucking, and then you're like, oh, I could just run that same fucking trade plan, but if I enter at different prices. So the guy that said to me 2 days ago, he says, futures trader, well, I guess it's no secret what he's doing. Explain us your methods so that we can become all enlightened people, please. All right. He says, that's the first thing. So I will explain that. And they said, footprint is 100% bullshit according to you. Right. Okay. Well, it's 100% bullshit in the sense that it's going to give you, okay, it may give you one edge, but you're going to need 100 edges in trading. You're going to need 50 edges, and what I mean is you're going to need, like say if you're going to build concrete and you want to put rocks in there. You have rocks, you have smaller rocks. It's like if you're going to put pavers in your driveway. You have to have this rough rock. It gets finer and finer, finally just like grout on tile. It's a finely tuned kind of mortar. They're all different gauges of mortar and different set times. Well, trading would be the same thing. So you'd have to have you might use this stuff, but if it's that great, you're going to lean on that one thing too heavy. Now you have an unstable system because now you're saying, oh no, if the footprint doesn't tell me, I'm not taking the trade. So you can overfilter trading, which should be under trading, because there's literally, you've got it so that if not all the stars align, you won't take the trade. Now that's how I used to started trading, because a couple reasons: perfectionist, and it was costing me a mint to trade. So not only did I need to be right, the need to be right was more prevalent because it cost so much in commissions. And I thought, and we studied hard back then. We really worked hard at it. And sadly, much to the chagrin of my ego and my intelligence, is that it turns out trading's dumb. And so when I look at it just triggers me, the level 2 stuff. I'm like, why not level 8? Why can't we see what Bill Gates is having for dinner? Because, he'd probably trade different tomorrow. And this idea that you're going to fine tune it, that leads you to saying, I'm going to trade one position. I'm not going to scale in and scale out because my system's that good. I only need to play one golf tournament a year, and I know I'm going to kill it because I'm so good at golf. I don't have to play these rinky-dink ones and these ones that kind of make me a little bit famous and ones that I do for charity, and I get those people to come out and see me. I mean, if trading is anything like real life, which it has to be because the market goes ballistic and then it does nothing. Can you make money from a snowstorm? Yeah, if you own a bump shop. So when you see bad weather, when you see markets screaming up or down, you're like, oh yeah, those guys are making money. Those guys that trade, that are in that trade before it moved, or they can jump on the 3-minute train or the 1-minute train. Oh yeah. And they don't have a problem jumping on that train to begin with. Like jumping on a train pulling the trigger isn't an issue. And this is where it's a complete loop back to the fact that you have to trade without any concern of the outcome. And I guess people to drive to the store like this, if I drove to the store tonight to get something, I could almost guarantee you I'd make it there and back unless I got hit by a car or a flat tire. But I mean, the odds are so low that that's you should take it for granted. And of course, if you're trading with a 20 pip stop and you've chosen this, or a 28 pip stop, you have to free yourself from the outcome, because the outcome's been predetermined at 28 pips. Now, if you trade a 1K with 28 pips, you'd be surprised how you can get into an 88K. And I've done it live on demos, and I've done it with real money. I've loaded into positions that are just monstrous. It's 150K. I built it out of scales, and so if I bought every 7.5 pips in a 40 pip range, or bought every pip with a master stop, but of course I'm not going to, nobody that gets in doesn't endure some type of drawdown to some degree. And these future traders claim, the one guy I was arguing with, he goes, I'm never going to draw down. Nope, never had it happen. I just find that impossible to believe that after you're filled, the market does not go against you at least one tick or one pip. But I think the appeal here, so here's a lot of the commentary. So there's 39 comments. And we're all thinking the same thing. So I'm just trying to rattle people's fucking cages to let them know that you don't have to be in this cage, man. You know, if you had survived a plane crash, this is what people that survive plane crashes, all of a sudden they become very risk-taking in a relaxed way. They don't really care because they're like, you know what, I just survived a plane crash. I just, like their worst fears have come true. That's the Mark Douglas story, that once he lost all his money, the famous quote he said was, freedom's just another word for nothing left to lose. This is from that crazy California singer chick, Piece of My Heart girl, Janis Joplin. So, I don't know, I think she wrote the lyrics, but that's it. Freedom's just another word for nothing left to lose. So if you've already taken losses up front, and this is what I did do after I took the course, I came home, wrote a check. This is what Mark Douglas said to do. Write a check for $100. Now, as soon as you do that, you can't lose on that trade because you've pre-lost. So you wrote the script, you wrote the trade plan, and that's why I think all trading is a trade plan based in the end. I don't care how good your footprint is. And what's the story of this footprint shit? I pull the trigger at the footprint completion. Do I place pendings at the previous footprint? Do I place stop if we break the foot? Do I put a buy limit at the heel? Do I buy one at the market, buy one at the heel, put a stop on the toe? Okay, this is the problem. You can't just say stuff, blanket pronouncements like, well, you got a Gartley here and it comes down to 6-1. I got a price to get. Let's drop down the 1 hour chart. Well, holy fuck me with a wet spoon. You should have already been on the 1 hour chart if you're going to be. This is what blows my mind. I almost think it's better to look at the 1 hour and go, can I make money in the next 3 hours? No. Let me go look at the 4 hour. Oh boy. Let's see here. Look at the date. Now you could go top down or bottom up, but when you go top down, the problem is if you go top down is you're going to say, look at this move. Oh boy. This could be 300 pips. This is what they do. Akel Stokes does this dumb shit. Look at the weeklies. Okay, dude. You're going to go to the 1 hour chart to get into this market. So if this is how you're going to enter, this is where you have to exit too. And if you're going to go to the 1 hour, so which one are you going to filter to? Look at this weekly chart of crude oil, for God's sake. Now, here's a futures market, right? Really tight spreads, man. And what are the trades in this thing? Oh, my God, they're mind-boggling. This is for forever on this weekly. Oh, it looks like it's going up, right? And I don't know where you put your stop in here. I don't know what you're risking here. I'm looking at a $4 move there. But the madness, man, I could sit here and I'm just going to do a complete, like I said, I haven't seen this in 2 weeks, this chart, I think. 4 hour, a daily Australian dollar with a little slight cloud chasing it there. Who's not selling this thing as it goes for a scalp right here? We're going to sell high and buy low. This is my method. He said, explain us your method so we can all become enlightened. Okay, here it is. Crude oil, sell at the market now, sell with limits above. I would buy probably in the middle of here. Yeah, I can wrap this up real quick for you. This is it. Here's the Holy Grail. We know that there's stops here because of that wick, right? And we'll say right here we would want to sell. Where else would we want to sell? This rooftop, there's a double rooftop here, right? We want to buy here. Here's the vacuum. We'll place buy limits in here. And we want to space them. We want to buy here. We want to buy here. So we're going to buy the holes, and there's this big monster right here. Look how these shaped candles here all stacked up at the triangle. And this other guy telling me, oh, triangles, schmangles. I'm like, you know what? You're a fucking idiot. Look at this triangle here. If you can't see this, I mean, you're just in so much, you're such mental trouble. We got no triangle. Huh. I'll be a son of a bitch. Oh, jeez. Oh, I took it off. Okay. Toolbars. Line studies. Hit the right mouse click. See? Got all pissed off there. I don't know, man. And these guys are selling courses. Why don't they tell these people the truth? That you've got to start with the trade plan and work backwards. You can't start with this analysis. Well, let's talk about Australia. You know, New Zealand, they make milk over there. It's a commodity. It's a commodity currency pair. Oh, dude, it's got a bad spread. Look at this thing. Are you kidding? Where was a great place to... We just saw this trade this week in the euro. New lows. Woof, right buying zone. You think? A big pivot region here. But having the scalp built into that, just the scalp alone on this is worth a ton. This is the weekly chart. For the love of Pete. So here's that triangle that goes, I just need two mountains and a valley. Or just keep dragging this out, the apex. There's a triangle. Triangle's right there. How about just two mountain peaks? In fact, yeah, forget the geometry. How about this? How about support and resistance? Remember that? This is resistance on close. Bing, 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 bing. Here is the triangle. All right. Valleys are closer together than the mountaintops. That's right. Look how it's just a beautiful pivot point here. It only works on closing prices, though, because that's the true pulse. That's a price pulse there. And we can use this as a perfect support line. Bing, 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 bing. Pull back. Crushes in. We've got 1, 2, 3, 4, 5 touches. Crush back. Where does it crush back to? So how far back you look has nothing to do with making money, because if you don't have the trade plan, in other words, if you can't say this, if I zoom out, okay, so I would say something stupid like this. This daily chart, and does this top matter? Oh, that's the price. Does this top matter anymore? Yes and no. I think this top, now this is true about, you may draw your trend lines on closing prices, and even tops become a bottom, but this is critical price here because this is the vacuum hole. It's all this stuff here. Okay, right? So this is where the market hasn't been in a while. Look how they take it. They, them, the crowd takes it a few pips above here on the daily, and then they rip it all the way to hell back. So what's the better entry point? Level 2 bullshit, or saying, well, you know what? Look at this. Even look at this. The earlier sellers made money. You're selling off these wick tops. How about this sell? Sell new highs. Well, you're scared out of your fucking mind selling up into that. And then one guy said, what if he keeps going? What if he keeps going? So I don't know if that answers your question about the footprint. They could go on for quite a long time. I love to drill down on a topic to the nth degree, so that's another thing that is fun about blabbing on YouTube. Okay, so we're 34 minutes into this rant. Now here's another comment 3 days ago. What I love the most about trading is the fact that we are all skeptical. I think so because it involves money, so therefore there's got to be a scam. Money scam. If you put the word money and scam, I would say they come up trying to make money and, oh, is that a scam? And that seems too good to be true. Well, this seems too easy to be true, what I'm saying. And apparently it is too daunting a task because you really have to use multiple tickets. And everybody's looking for not the Holy Grails, they're looking for the Holy Grails. So the Holy Grails are also basically order placement and diversification in stops and targets and entry. Ultimately, you never get in at the same price nor exit at the same price. When you see them stacked, this is when you have a fragile situation because now, instead of your bricks running, offset by half a brick, you have a complete linear grid of bricks, and it's very fragile, right? Because everything shifts. There's no overlap, so you have to fade it, overlap it, to have a strong. Another thing about this level 2 thing is, why wouldn't it just matter your footprint in there? What's your footprint in the market? Not what is the footprint of Bill Gates and Sammy Hagar, but what is the footprint of your tickets? Are your limits in a really nice tight pack waiting to get hit? Is the scalps built in? Did you account for not turning on a dime and going the other way? Did you account for zigzag noise? So you have noise scripts. You have, I guess a trend script would be, hey, I got a 78 pip stop looking to make 150 pips. I'm going to get in here. Maybe buy at the market with a 75 pip stop with 150 pip take profit. Yeah, you're going to take some heat probably. I mean, you're asking to take heat. And another psychological kind of thing that occurs when you place a stop is if you've ever been stopped out, you would have a little paranoia that they're going to come and get my stops. Like, oh boy, they're going to come and get me. They're going to come and get my orders. I just know it. And that would be a possible paranoia that's going to happen. Once bitten, twice shy. And certainly if it's a big ticket, this is why I think you have to, it's baby steps, because you would have to build up to a big ticket. And hopefully you're making $24 on a scalp while risking $150, but at least you've taken something off the table, reduced your exposure. And the market shows you these high value windows where you can scalp, very high probability. And even if the probability sucks a giant dick, it's going to be about the money in the end. So this talk about risk and probabilities. Well, if you're going to, the probability of me making 10 pips with a 200 pip stop is very good high probability trade. You cannot do that. That was the problem I had with this guy that wanted to trade like that on every ticket across the board. You can't trade. Yeah, you could do that trade once, and it's an end of the world stop. In other words, you just can't do that all day long on every ticket. Because at some point you have to say, I'm going to risk getting stopped out with an 18 pip stop to make 42 pips, and or I'm just going to leave that one ticket going. Ideally, you're peeling off these tickets as you come near the target, and you're kind of like almost totally out of position, go flat. Now it's always going to feel like, oh, I should have stayed longer if it keeps going. But if you took off 30% of the position, even 3 chunks, if you had it so it's scaled out in 3 instead of 2 levels, that's always going to be better, but that's more work. So if you scale out in 5 levels, does a ton of fucking work. But hey, you got your scalp button, you got your you got your 10 pip winner, your 5 pip winner, your 15, your 20. You could do it every 5 pips. I've done it many a time where I set the keyboard up. Now this is like you're going to say you're going to scalp. Well, you're going to have your maybe 4 market orders running that you can press a button. Get a Cherry G86 keyboard for $50 used on eBay and have your finger on the trigger and just be sitting there. You got a couple of tick charts going. You can see the fucking other broker. You see get a high-end broker with a fast feed. Get a schlock broker and arbitrage. I mean, you got your finger on the trigger. What are you talking about? Getting a half a second jump, 500 milliseconds? Getting a 30 millisecond jump on somebody. I mean, God, guys are playing these fucking laser games. The market, you see that one broker going up, you're like, okay, the broker's not onto it yet. And this is the argument that I have with these fuckers about the level 2 shit. Once again, oh, well, it's a central pit. We could see every ticket on the planet. Well, who gives a fuck? We don't know what's in some guy's brain. He's got a fucking pending order on deck to pull the trigger. What the fuck? Okay. Once again, level 2 garbage. Think about this. Bill Gates is sitting there with a cigar and a martini, and he's about to pull the trigger on some monster. You can't see his order. And by the time it hits there, it's like those guys in that stupid ass movie about when the market crashed, showing tick charts with time lag in it. Well, of course, the futures isn't synced to the fucking thing exactly. Of course, it's not fair. It's just like a Who concert. People die. It's real life, fucker. You think when the news comes out and the spread gets wide, what, you fucking outlaw fucking clearing orders? Of course, there's a fucking bottleneck. Kind of heard that a long time. What's a bottleneck? Why is the traffic all bottleneck? It's fucking order imbalance, dumb fuck. What the fuck? What's wrong with people? Well, I guess really volatile. That's crazy. That news. Well, dude, it's fucking completely predictable where it's going. The only thing frightening is if you're in 40 standard lots and it's ripping up and down and you're like, holy shit, I'm rich, I'm poor. I'm rich, I'm poor. Yeah, that's what's fucking disconcerting. But you have to know that it's going to rip up and down. Like, who didn't fucking think that was going to happen? Now, the first point of that is, like, I seriously think you could show somebody that's never traded in their fucking life. Here's what we're going to do this morning. I know you could do it because I could show somebody how to build a tooth or build a table, and they go, well, gee, how's this going to work? All I see is wood and a saw. Okay, Sparky, what we're going to do here is that we're going to get a little blueprint going. This would be our trade plan. How short are the legs? How tight are the stops? It's no different. And of course, it's more stable. The more framing we do, the more cross orders we do, the more stable it is. So Noft is trying to be precise. That's the problem. And in a colorful way. What I love about trading Moelis is the fact that they're all skeptical, and everybody can criticize our strategies. Of course, because this is how you learn. Like when you're trying to play a song when your guitar's out of tune, I'm like, hey, knock knock, you're killing my brain. If you want to play out of tune, make the whole band out of tune. Like, just go there. Most people are playing in tune, and of course there's auto pitch. If you can't I haven't guitar through auto pitch yet, but so we need more guitarists using auto pitch, 1 per string. Pick up 6 preamps on your guitar. But from my point of view, this is okay. So everybody criticizes other strategies, this guy says. And he says, but from my point of view, definitely once I incorporated order flow to my strategy, I said incorporated in conjunction with strategies, parenthetically. Of course, he's using it as an add-on device. Okay. I like to see the meters I like to see plasma meters on a high-end amplifier, but I know when it's clipping. I know when this thing is not, when I'm about to blow my speakers up. Yeah, it's nice to look at the meters. I think we all know when loud's loud. And seeing as how you have to imagine you have 10 power amps, that's how I'm trading with 10 amplifiers. I blow up one amp, I just move to the next. So I'm not so concerned about that, I suppose, because I'm a visual trader. he goes, he says, I improved my performance. I don't know Noft, but order flow helped me to reduce the loss and get better location for entries and exits. However, your video is awesome. I love this kind of video because it helps ask why. Yeah, right. Well, I think that, in other words, when I saw RSI and I got what was going on in RSI, I go, oh, that's great, because actually what I had to do is discover why RSI is doing what it's doing. And it's about momentum and then lack of momentum as the market's taking a breath. And since it's a strength index, it's like watching the recovery cycle in something. And so I understand what RSI is doing, but it took a while because it wasn't explained to me like that. It was explained to me like we have this, we have that. But I thought, what's really going on? Why is RSI oversold at a higher price? Is because it's really weak, but it's drifting up. I mean, it's up, but it just weakened at a higher price. So that was the entry in the a trend trade entry, was this, what they call positive and negative reversals. Then there's divergence, which is you're watching the index of it, the momentum's decaying, the strength's decaying, price is still going up, but we're diverging. It's the moving average would do the same thing. If you took a moving average, MACD would do the same thing. You're watching, because you took RSI from an index of 1 and whatever you made it to, say you have a moving average of 20, as the market can't push that 20 anymore. You can see it's losing strength against the 20, but you could also draw a trend line, a nice clean trend line, and see it losing strength. It's not hitting the top of the channel anymore. So that's all the same thing. Everybody's saying the same thing, except the way to profit from all these cliche things that we all know exist, divergence and breakouts. Oh, you get killed trading that breakout there. I had some guy say that once. I was like, well, of course. Especially if you trade non-directional breakouts, you're giving up a leg. If you trade a hedge, you're spending money on a leg that may not work. So your ratios need to be way better leaving the gate of a breakout. And you got to scalp something out of the gate, because what if it goes sideways and whipsaws? You've got to get paid on the initial burst. So say you came to do a job at somebody's house. This is why people charge for estimates. If I show up at your house and I look at your house, it really doesn't cost me much more than brain tissue to stare at your house for an hour and go, yeah, you're fucked. Now, I charge you $100 for my opinion. That's your first. And of course, if you're going to take that out of the price of the total job, I've charged $100 to look at it, $1,000 to fix it. If I do 3 estimates a day, 3 scalps a day, then I still made $300. If I do 3 scalps inside that pattern burst, so are you going to compress? Another thing is that a lot of people are trading multiple currency pairs with the same strategy. Maybe they're running 30 pip stops on 8 pairs. Well, what if you took just a euro dollar and ran 12 pip stop, 9 pip stop, 14 pip stop, 22.5 pip stop? You can put a 22.5 pip stop. It's a 5 decimal market. So you can put a 10.1 pip stop on something. So all this stuff, and don't forget, these are 5 decimals. Forex, when I started, I had 4 brokers that ran 4 decimals. So I had scripts written for that. Very easy to write. You don't have a choice. When you look at these tick charts, you got to realize this thing's fucking 10 times the res of a 4 decimal chart. And that's not easy to think. That's not easy. So, you know, think about it. Think about it. Right there, you've just kind of created this distraction, and if the market just moves a little bit up. Now, if you're in really big and it moves just a little bit, I mean, they just moved like $10. It just moved a tenth of a pip. It just moved $10. Right? It's $100 a pip. Just moved $10. You make $100 in a 1 pip move, which means it costs you $200 to pull the trigger if the spread's 2, and you're down on the trade out of the gate. The market has to move 2 pips in your favor to get to break even. So, those trades are completely different than, I say, the 1,000 pip stop, where you're 1,000 pips, 1K, you're risking $100. Just think about everything from there to there. Those two bookends to the possibilities for sizing, blah, blah, blah. So, got that. And, yeah. But no, it's perfectly fine. I'm only trying to say it's that they present this like, well, you can see this and you can see that, and volume too. I think volume's complete bullshit. Volume is just redundancy. And the thing is that a lot of people do this because when you're driving, say, people see it in these car races, a high-end car going fast. All the gauges and this oil pressure and everything's tuned up. But in the end, I mean, a lot of guys can hear the engine fucking up. I guess you're thinking about being a pilot of a jet plane. It's a better analogy. You're in there. You got all these dials. You can see just the height you're at and everything. So you're very, very tuned in. And it's helping you fly better and feel safer. So it may not be making you money, so I get it, right? I'd like to see that big footprint. And as confirmation to stay in the position. So I prefer the confirmation telling me I should stay in. I'm already up on the trade. I got in before confirmation. Here comes confirmation. Okay, I like this trade. It still doesn't mean that you are in too big, too wide a stop, or in too small and too tight a stop, or you're over trading, you pull the trigger too many times per millisecond or per hour or per day, or you're getting out too early. This is not to mention the fact that if you're satisfied making some kind of money and you don't stand through the punishment of 3 hours or 3 days and hold on to a big position. Now, I've held on to some positions where I'm like, oh yeah, no, this is a swing trade. We've taken out the lows of the week. Oh, look at this daily chart here. Imagine you had the balls to buy down here when everybody's telling you, oh no, she's in a downtrend. This downtrend, this trend shit, another fucking goofball thing. Well, it's in a downtrend. I can't believe you're buying that. Okay, if you load the fucking wagon up on this last capitulation here, and you cashed out of something into this congestion here because you knew there'd be a battleground here because this is literally a Forex exchange. And here's where the exchanges happen, is all the exchanges. You know there's going to be exchanging going on. But then here we go, just bursting through and once again filling up this vacuum. So these things are all spaced. And of course, if we were on the 5-minute chart, you would have to consider trading that 5-minute vacuum. If this is a 5-minute chart, I would totally want to be short up here. Go, oh yeah, we're filling this vacuum. Well, there you go. Right. There you go. Just look at that. Will you look at that? So here, you're coming in here, right? And you know that vacuum's good till here, right? So this is when that hole, and it started filling, it started caving in the rafters way up in here. And so it's kind of like I'd say it's kind of a weird triangle looking thing. If you consider this as your baffle, okay, so if you just look at this vacuum, here's another one. It's more like these vaults here. Actually, this is all the way down. This one's good all the way to here because we know that exists. So this is straight across. So you're building like a structure of vacuums underneath price here. And you just, here's the other one. This one's good till here. Back into like this. Here's a vault. We haven't seen that in a while. So it's like this. I'm thinking about this hole. And I would have been long here on the 5-minute because this is your classic. If this was a 5-minute chart, you don't have to change time frame to see this shit. You would think about this seriously. And you'd probably want to be buying even into here early. So you bought this new low and you're really loading up here harder. So you martingale in. Here you're getting really heavy. But you know your target has to be this bottom. So you're already out in that. Cashed out, you're slightly up. And got this. The next volume back into pounds. This just crashing into this right now. How far will that go? And we're going to have to sell something here at the new highs. We got this vacuum to come. This one. And here's a real big deal is these shaved tops here. They're all good prices to sell at, and you'd have to have a whole labyrinth of orders in there. You need a lattice in there. This will be a vacuum coming up for sure. And this, all the way back to, don't forget this one. This vacuum left behind here. Maybe never fill. Looks like crushing up into this one. That's a daily. Now, this is another problem. Well, not a problem, but if you were going to buy that in anticipation of crush through here, don't you want to have orders here in case we retest here? Yeah, so you want to have buy limits here and sell limits above. And you're kind of long into it maybe. And this is the breakout. You're being trapped right now. Don't forget. Right now, here's the trap line. Right? Because we just new high, probably pull back coming into Sunday. All you have to do is zoom out one level and you're like, oh boy. See now how to spot all the vacuums that you missed trading. If you knew this was a big deal, these prices, and you could have actually made money on the pulls into this and then it goes up, ripping up, right? Look at this one. Even if you didn't buy this rally, you know it's forming this huge vacuum here. Not to mention you have not filled this monster. You dipped into it. You pulled out. That also includes the crush into this one. These huge voids. These are monster voids here. And you can see the behavior there. Look how hard that whipped in, and look at what it did here when it made a new low here, and it was inside of new lows from back here. A rally up into the floor and down again. Buyers come in hard here. Now this is a great counter trend trade if you consider this, and I'll have to identify the trend I'm talking about, is this current down move. And if you wanted to lock it in on time and you can build a price pulse, this is what I learned from the RSI guy. Take this, copy it over, write your classic projection to here. This is where that would go. You pick the lowest close actually to project off, so it's really like this. It's a parallelogram. Right? And this is your rate of change. Now you could actually use this as your time and price target because you could probably, of course you showed up early on that one. But you could do it here. But this is what I learned from RSI. I don't need RSI to see this now. This is how I would build a price projection. Find the lowest close in there. But you still need to have that scalp built in to pay for this, the drama of this stuff. Look at this, just going nowhere on the monthly. It does look like this is a bottom becoming a top on the monthly. But it doesn't mean you can make money, because if you sell here and it keeps crushing up and you put a stop in too tight and blah, blah, you know what? You never make money. Here's the infamous guppy on the daily. A great support area here, but like I say, how big? Look at only one trade this month that just blows your mind. Buying new lows here on the monthly and riding it to taking out the high of the month. Mind-blowing 4-day smash up. And the market does, to me, appear to be really not having much resistance, because in my opinion, what's happening here is that there's people that will buy these new highs, and there's people trying to sell that, and this is a hole that's been itching to be filled, so it fills very quickly. And all the protection from the trend traders. If you asked anybody in this chart, I guarantee you the guys that look at this segment say it's in a downtrend. Comes after their stops, fuels this buying, and then when we get to this last thing and it runs out of, there's not much controversy up here. Actually come right to, like I say, we took out, once again, and this is the guppy, mind you. The same pattern, new highs, guess what? Ultimate reversal zone, right on the wicks. You know, the time people are looking at a triple top. This is why I just think the line chart's better. I can see the triple mountains, and I can see the liquidity dip into the well here. It's like a 77 pip window. Very tight window. Not a bad spread here from Evolved Markets. And here, look at this, new highs on the guppy. Now this you need a wider stop. But if you had the balls to sell into this thing, pulled back quite deep, and where does it typically go is back, now it's filling this one. So it's vacuum to vacuum. Doesn't get to these limit orders. So if you had limit orders here, no filly, but here you got filled, and I think you made money because I think we dipped in here and then we went higher. At some point, we went higher after that. It was a great trade. Buying new lows. And here there was no chance to get on the short train unless you consider selling the high. Now, it was very aggressive to sell previous day's highs, but that's how you do it. There's not banker orders there and blah, blah, blah. The banker's orders, this is fucking bullshit. It's the crowd. It's also on time. This is a bottom becoming a top, or maybe just, you know, like say you can't sell here with a too tight a stop. And the final capitulation, we fall through the floor here. Go to the weekly. So the weekly, yeah, you could go looking at the weekly for a trade, but I guarantee you that unless you had the patience to do this weekly thing. Now, the one thing I could say about the weekly is a narrow weekly is a small week, quiet, great breakout trade. Look how clean this breakout is. Look at these breakouts, how clean they are. But these big, there's no good breakouts on these big bars. Too high risk if you're going to run. Here's there's a triangle there, I'm sure on the daily. It's getting smaller. So you know anytime it's quieting down, Doji's a triangle, it's all the same thing. Look at Canadian dollar. They trapped these poor suckers up here. That was, if you had the balls and put sell limits up here, another great reversal trade. Like I say, you need balls because you're selling into a thing that's breaking out and really running. And look at, it's running amok. And look at how tight this window is here. Just tons of, I mean, right on this rooftop. This is the daily. Pretty spectacular reversal there. Looks just like crude oil, actually. Look at this top become a bottom in time before the collapse. And still, when this collapses, in my opinion, still going uncharted water, path of least resistance, down, down, down. People love this Canadian dollar thing, but this thing ripped back, for God's sakes. Completely different trade plan in the 4 hour. and then the hourly. So this is why people are really getting their brains racked. The 4-hour vacuum is here. So you got to think about these entries. Got this low from 2 days ago, ripe for the pickings, and even there's a couple entries there for scalps. It's a real scalper. You can scalp these 1-hour charts. I don't think you have to be on the 5-minute to scalp. I mean, that's kind of ridiculous. Because I look at the 5-minute chart, right? It's disorientating. This is a disturbing move today. As the news came out. Jobs reports. You trade to see the direction. Of course, if you sold it, you could have run a tighter stop. If you sold these new highs up in here. They're breaking out. And so this is why it helps to look at this 1-hour chart. Imagine this trade, compare it, and fix the scale so you can see, well, what's that like to trade that? This as opposed to this, as opposed to this. And it doesn't even, I mean, you see it barely on the 1-hour there. 4-hour, it's invisible. But look at all this. You would really tell me you would run a moving average on this fucking shit? Look at this. Are you nuts? How's a moving average? Well, come on. Really? I think the trade here is like, dude, I'm buying this and I'm selling this. Buying new lows. Haven't seen these lows in 3 hours. All right. How many hours away is that low? Like 12 hours. You see the basement. It's so easy to see here. Look at this. Here is the 3, just like we saw on the other chart, big shaved candles there. Just the wicks are just stacked up. Huge liquidity pool just right for the pickings up here too. Now you go to the 15. Okay, it's disorientating because now you're like, oh, should have sold that. Look at that pullback. Now you're starting to look at stuff that is really like, and this is the problem we have with level 2. It's just too much information. It may make you feel good, but it may not make you more money. When you go from the 15 to the 1-hour, which is 3x essentially, 4x, I guess. This is, you can see it. I'm not getting a price grid on this. So, but you see the holes in there. Look at this one. This is a classic for a Canadian dollar. Goes up, trades sideways, whoosh, back down. This hole it left behind. So hard up, distribution, hard down. And it's a very choppy market. Look at this move here. Insanity, dude. Even if you sold here, you made money with the right, like I say, with the wide enough stops. If you scaled into the sell of the new highs of the day, you're a genius. So buying new lows, selling new highs, definitely that's a good method. Now that sounds too simple, and that's the problem. And people are like, well, yeah, I did it here and I got killed. I sold new highs here. Okay, if you sold these highs and you put a stop on it, yeah, you got stopped out. If you sold here, new highs, you made money. If you sold the last gasp of the day, you're going to make it back. So nothing would work across the board. Besides, you should be running long into these shorts. In other words, the ultimate trader robot is going to trade this breakout. He sees the market treading water for 2 hours. He's already long by default, no sells. Buy stop entries have been triggered. Now here comes the sell limits. So if you got into buy stops here, ultimately you're getting in here at the market or on stops or very tight limits because you have a very small range. Then the range explodes into your sells or your take profits, which is the same thing. And you'd sell into this or you'd cash out into this. And if you sold all the way to here because of this rooftop and you had prepared to sell to here, you bought here, you're long, you sell here, you're selling up into this, you cash out back to here, to here, to here. And amazingly, you can do the same fucking trade over again. That's why I say you have to replace these orders. You have to buy at the same zone again for this trade and to sell the new highs. So you're always buying new highs and selling new lows. Now, it sounds really stupid, but the only way you can survive that is with put 21Ks in there. I'm sure you can do it. You have ones that are going to make 8 pips, and ones that are going to make 20, one is going to make 30. I don't even know how many pips this is. Okay, this is, it looks like it's a, I'm sorry, yeah, that's, I read the wrong number. So that's 10 pips, 10 pip window. When I was doing the other one, I don't know what it was. I was reading the first number there. The first number is 12. That's 12 hours, and that's 12 pips range. So you could have a 12-hour pending here, or all day. So you have a sell here all day long. You know the high of the day. You miss the sell, but you could sell it again. This is another thing. How can you get married to the same woman 3.5 times? Or how can you, have 4 mistresses? This is how you can do it. And look at this entry. That is in a 6 pip window. So you could run a 10 pip stop here and load it up and made yourself 80 pips. Right? 50 pips. And you're adding on the breakout here. If you went long here, why did you go long? Not because of level 2 or level 1 or level 3. It's because you could see this. You had the fucking brains to see this low of the day. And you had buy limits sitting here that never got filled. They didn't get filled to here. And look at the reaction. Look at the reaction off of these prices. Look at this one. This is a 3 pip window. I know it's only a dead cat bounce. And just like the other chart, where does it bounce into? Previous lows for the sellers. It retests this breakout point too. What's the trade now? Well, obviously you're buying right now into this whole plunge. And maybe running buy stops here when it quiets down. But as far as selling now, I wouldn't sell it. Maybe a little. But I'd rather just let that. I'd rather just sit with a bank of pendings here into the abyss. It looks like we're going there. Now this is where you get frazzled. Of course, here's a the launching point here, so I'd buy pretty heavy there. Yeah, this thing, the dollar could be totally creamed, right? But at some point, this is the daily. At some point, it's going to pull back. But I said, if you're trying to make 8 pips, it's completely different than making 80 or even 18. So that's a big deal. Oh, this has. So here we have a grid of 20 pips, and I have, I'm sorry, a 10 pip grid with 5s, these 5 handles. So here, for instance, on the British pound, these prices exist, right? You can see, and here's the little mini pullback vacuum. You have buy limits in this pocket. It's like a pocket door there. Right? Look at this tight ass entry. This 2 pip window there. Coming to these basement floors. You never got filled on these. If you're selling new highs, you never got filled up here. The 3-minute chart. Go to the 1-hour chart. Look at this breakout trade coming out of Asia. But the markets will break out, and look at this last thing they do before they plunge. We go 1 pip higher, and then total plunge. Rally up in, see that a lot of times. Rally up in, just barely break out and rip back. And when it rips, this is the critical price, is this hammer. And so we have all this area to fill. So we know this in advance, that all these exist as places to buy. And we bought here. So a very aggressive trader would have started buying here. Here's aggressive, moderately aggressive, not so aggressive, and this is the best entry in the planet, is that very last stop hunt, or that very last structure tag. But what if you bought all 4? My question is, and you had a pending here that didn't get filled. What if you, and this is a 5 pip window. This is a 5 pip grid I put up. So what if you bought all those and didn't get a fill on this one, but you got filled on just these last 2? What if you martingaled in, where you kept on, here you buy 1x, now you buy 5x, now you buy 10x, now you buy 20x. And to top it off, you've got to stop here. Right. I'm sorry, that's 20 pip grid. So these are probably 5, 10, 15. Yeah, these are 5, and this is a 20. So the 20. So you bought here. I'm sorry, you have a buy limit here that didn't get filled. Now this is the thing. Is it filling now, and would have that made money with a 40 pip stop? Yes, it would, because your stop would be down here for that ticket, and eventually you made this much money, which is doubled your money if your risk was this. But you've got to think about having this trade plan commingled with a scalp. So you'd have to, I think the ultimate diversification is to have, like, say, 8 pip targets to 80 pip targets. 12 pip stops to 24 pip stops, whatever that is. Now, if you play the game like this, where you say, I'm going to stick to a 24 pip stop max, now I've got to find places to park that order. And there's plenty of places to park that order on this chart without risking. You may not even get near that stop. And if those are 1Ks, it's $2.40, place 8 of those, it adds up really quick. I could probably place, I'd say, 1,000 orders in an hour on the chart. It's like I say, it's like painting a painting. So I'm a painter, and for me to get something to look really cool, it's going to take me about 20 hours of just putting in fucking line upon line upon. It's just like orders, and it's going to look better. It's going to be smoother. It's going to be more continuity. It's going to perform better. I mean, like I said, why did they put 5 speeds in it? Why do they put 12 speed gearboxes in semi-trucks? Because you're hauling a bunch of fucking weight. So you're taking the sweet spot of every gear, the torque range, and, the differentials you put on that truck, everything there is all synced. So if the differential is your spread, the currency you're trading, that's all got to be dialed in. What's going to be very psychologically punishing is the fact that when you load these dominoes up and it unfolds, and you're like, really? I came back once, went out for a couple hours 5 years ago, came back, and I tried it. I placed a bunch of orders, and I'm like, damn, they didn't fucking fill and make money. And some of them were still up when I came home. Now this is where this is always going to happen. Just like cut your losses short. You would, if you come home and you're up $800 and you're like, oh my God, I'm just get out of it. Like, if you look at the chart and you don't have time to really think about it and get out your fib tools, your first inclination is, God, just get the fuck out of this thing. And the times, this is what's going to happen. Your brain's going to say, well, the times that I did that, it kept going. And the times that I didn't, I lost money. But you're kind of tricking yourself, because you'll only remember the bad times typically if you're a pessimistic person. So you would just kind of naturally say, unless you kept track of this shit and kept in that's the only time I think a journal would work is if you didn't lie to yourself in your journal. Dude, you fucked up. Like, if I had a journal, like, every page would be like, you could have done that better. I'm very self-critical, so that's why I'm just critical all day long. So being a critic is my skill set. And I'm critical of myself, so I think I'm usually too hard on myself. But I figure this way. This is the idea that you have a very sharp sword, because you're constantly saying, no, could have dialed that in better. And so as that happens and concretizes, and you start to trade in a way that you would drive a car. You don't drive a car shitting your pants. So if you're driving a car that weighs too much, this would be like trading in a position that feels uncomfortably large to you. Even though you've made so much money in these large positions, there's a rush about trading large position. And then there's the whole mystique about, oh, well, I'm a trader, and I see these people, and I can't say my desk. I probably couldn't photograph my trading desk right now. I'd have to clean it up. But I've seen some very anal retentive trading desks. I've seen people that it's like literally everything's so I'm like so clinical. Like, the dude, it looks like a fucking hospital room. You're gonna it's very important. Now, I'm not saying that that's not helping them trade, and but you really wouldn't need that. Like if I came to your house to save your life, I wouldn't say, well, can we change the wallpaper first? I know you're bleeding to death, but I can't work in this environment. I think that you should have like there should be a part of your brain that's like able to go, no, that looks like for the moment on this chart, I guess I'd buy a little bit. Now you could be wrong. Of course, for me, I'm always buying, so I'm usually wrong on that. That's why I put a pending below. And I think even if you're selling, so the times I focused on selling, strangely enough, I built some sell scripts finally, and so I'm running those. And I'm like, you know what? I think I'm in too early on this one. So I'd run the sells, and I had to keep telling myself, don't worry, they'll fill you 50 pips from here in 4 hours. So I go to sleep knowing that they could probably go up 50 pips or down 50 pips. Now, the only thing that's white knuckle about it is if you don't like selling strength because you're like, oh, I'm bullish, now you're going against your nature if you sell. And but it's making you money, so this is a big conflict. I'm making money doing something that should not work, or no, I don't feel comfortable doing. So you go back to the Noft, right? That makes me feel comfortable to see those pretty colors and the numbers. Okay, that's great. But I guess it's like a placebo effect, maybe, or you know what? If that works for you, go for it. I'm just saying it's ridiculous in the sense that you would use that as your anchor to base your trading on solely, or say, well, this is so good, man. Yeah, so I get people are making money from that. What I'm saying is that I think we could all make a ton more money if we worked a little bit harder and said, you know what? What if I just think for myself on this one? Pull off, and that's the naked trading idea. Let me pull off all this stuff and just take a look at this and say, for me to make money, and this is the Mark Douglas argument, for you to make money as a bull, you need to buy here and you need to buy lower. And if you need to buy right now if you're a bull. And you also need to buy if it goes down because you would want to build a winning position, and you're only going to do that by buying counterintuitively into a sell-off. Same thing on the sell side. If you're bearish, well, sell one position. Now go sell 80 more at the same size. So what you've done is, as soon as you sell, your subconscious really doesn't and your ego doesn't really say, oh, you just sold like. You've taken a directional position. Right there, you've made like a contest for your ego. Am I right about this trade? I've done my analysis. Now, the wallet side of your brain, or the wallet side of your wallet, your money account, has an objective view of just dollar risk. And total exposure, you'd call it, right? Because it's you're not talking about profits yet. Hopefully, you're making some good trades, or making some turn out to be profitable. Even if that didn't happen, you'd reduce your exposure so you never feel at the end of the week like, holy shit, like you got beat up. Right? So the idea of getting beat up means that you're yelling epithets in an ethnic bar, wrong ones, and Oh, here is another comment on the guy, some guy named James Gold, AU. I think AU, is that the symbol for gold or silver? This is what an arrogant cunt sounds like. This guy is so full of shit. It is too funny. For anyone that does not know, market profile is one of the most common strategy. Yeah, I talked about that. That's pretty funny. Fred Bradley. Hi, my name's Fred Bradley. This car over here has 4 wheels, just like the last one we looked at, and a spare tire that's not a donut. So I don't know if that helps. Anyways, I guess I think I do think Bitcoin's doomed on this. I think I did my tangential work for the day. I think we could get hammered here. We get hammered on this Bitcoin. The idea that Bitcoin is going to some ungodly amount is just fucking hilarious. Now, look at the monthly. I'm still short on the demo. I never got out of these winners. So I had pendings above here to sell. Yeah, it's a demo. Full disclosure here. I'm putting more sell limits in case we do go up to 17, 19,000. We've been up. Where is it? We've been there. Look at this. Never closed there, but look at that. Now, would you look at that? And I got out of these. Actually, I had settlements up there. I cashed out. But what if I was still holding? This is another thing. What if you came back to this chart like 5 months from now? You'd be like, yeah, Bitcoin, 1,800. Told you. Actually, Bitcoin could so totally, like, so sure, retest this, which is like $5,000. Like, I'm so sure. Like $4,500. Retesting a hammer doji triangle here would not be. In fact, look at the vacuum here. If we ever came back and started to fill this, that's the monthly. But we did have some vacuum fills here. I can't see the fucking wicks on here to save my life. That's why I made fat wicks. But here was that fill for the bounce. But this thing looks tragic, man. Anyways, that's what I'm looking at. I'm getting tired. I don't have the energy to complain about what people are typing at Forex Factory. I think it's the funniest shit I've seen in the world. Let me see if you can bring it up. Forex Factory stuff. We've all been there. Oh, I do want to just... Please hold. Your call is very important to us. Forex Factory. It was in the thing where they talk about, people... It's like the forums page here. And, damn it. Oh, here it is. Some guy was talking about, it's disappeared now. A trading room where people don't fight. I thought, what fun is that? Everybody's like, good rules. Everybody's so polite. It's terrible. Everybody's so polite in trading. Here, powerful tool that analyzes direction. Hello there. Hello, everyone. Is there any powerful tool that analyzes the direction and strength of 8 major currencies, both in real time and historical? Generates a sound signal and a message when trend changes or have divergence? The strength of the signal is calculated for all pairs, which includes these currencies, 28 in total. Wow. Yeah, it's almost like a barometer. What's the hottest babe? Which chick just got divorced? Do you have her phone number? Yeah, but if you call her at the wrong... Oh, he's got the meter here. So he's a strength meter. This is the old... Oh, just show me the train to board. But unfortunately, the markets don't go in a straight line, so you're totally screwed there. Just drop my mic. So you're totally fucked when it comes to straight line theory. And this is the problem. I think it's always going to be... You're riding the noise levels. Here you go. Here's the voice of reason. Why 28 pairs? Where does that number come from? When actually it can be any number that contains the currencies of interest. And when it largely depends on broker and the symbols chosen in the market watch. Forget about 28 pairs. That is something that somebody found outlined in the ultimate number, while in fact it's meaningless. Absolutely. So this is why people argue about trading, because like I said, if you're trying to make money, it's completely different than if you're trying to be the build a barometer of weather. So either you're a person that can walk through a snowstorm, or you're the person that's predicting the snowstorm. Completely different, right? Oh, I told you it was going to snow. Yeah, but can you walk? Do you have snowshoes? If you're building snowshoes, you don't care about snowstorms. It's snowstorms that are making you money so you can build snowshoes. But you don't care when it snows. The trade plan is the snowshoe. So whether you can predict the weather up or down, like it's going to rain or snow, if you imagine bull bear. Okay, is it rain? And like, it's like, well, it's snowing. How much longer is it going to snow? Did we miss the beginning of the snow? Should I have shoveled the snow? No, because it's going to snow again. Should wait till it gets 4 inches, then shovel it, come back every 4. Okay, how do you do that? You wait till it's done snowing, like they do around here, and then they finally plow it. Like, they wouldn't think of shoveling while it's snowing. Like, what the fuck, dude? They wait till literally. They wait till it's. I see guys salting the road at the right at freezing point. Right, they're salting the road. Now it's fucking cold as hell. The roads are icy. Do they salt it? No. They say dumb shit like, well, snow doesn't melt at that. I mean, ice won't help snow melt at that time. So who the fuck cares? Put it down there when the sun comes out. Get it the fuck, at least for gritty traction. I don't even know. It's just so retarded. Whole world's crazy. But yeah, we're all spoiled and rich. So that's why we complain about this shit. Because we've got so much, like, nobody's, people just about have what they need. You know, people are living longer and wronger, as Roy Masters would say. So everybody's got what they need. And it's just fun to complain. I don't know. I get a kick out of it. Anyways, I couldn't find that article where the guy was saying how he was going to build this ultimate... here, let me dip into this. So here's this Discord room I went to. This is from the Forex Hangout guy. He's trading in the States. So these people are on this Discord channel. So I like to read through the comments here, but you can just see the thinking that people have. If you read the comments now, people will post whole the charts, what they think is going to happen, and people project their prices and stuff. But I don't know if it's right for everybody, because really, like they would say, life's a do-it-yourself job. Trading is just so tough, because what if I post on here that I'm just going to sell and it keeps going up? Am I going to feel like, well, God, people think I'm short this thing. I mean, they must think I'm a loser. And I don't know if... They say you shouldn't talk about your trading with other traders, just like you shouldn't talk about your sex life. Now, some people do. I know people that will explicitly describe what they've done sexually, and I'm like, just it's always fascinating, but, and to be polite, I always listen. But, some people would just say, well, I don't want to talk about it because it's private, And so that is a factor to consider. He says, I was about... Here, some guy says here, I hate news events. I sat and watched. Now, I don't think... I know the spread gets nasty, but I think the news is the fastest way to win and lose money, and you really should try it, if only on a demo. Sometimes the smartest move is to sit and watch. I've lost more than I would have... I lost more than I've won trying to trade the news. I think that's because you didn't lay out the orders in advance. If you laid out like a trap for the market, and when the news comes out, the market might retest 3 times. You got to cash out. You also would have to cash out unless it's written in there. Unless you chose that whole thing, you're okay making 40%. When if you would have got out and taken profits, you would make 80%. But this is when it comes down to plan your trade your plan. So if you let those guys sit in there for that whole move, then, this guy says, I always end up at the wrong side. Have you ever used pitchforks? Now, the attempt of using analysis to cure the problem of losing, I think seriously losing is about money. I don't think people complain about losing $1, but they certainly complain about losing $1 million. And we can all trade with that trade plan. So, and of course, you would still need a trade plan for all these elaborate pitchforks and Gann grids and you name it. Stochastics, you need a trade plan for this shit. This guy says, just been playing around with them, with the pitchforks. They're good. They're good in the Chinese restaurants for sushi. And using them in a way that I can potentially show you targets. And of course, it's giving you a target. But I think if, like I said, if you're trying to make 29 pips, you're like, I'd like to make 29 pips today. You would look for a place to do that trade and do a lot of those 29 pip trades. Imagine you got them 5 pips apart with 29 pip targets and a 18 pip stop. And you put in 10 orders like that. And you only fill on 7. And the other ones cash out too early. But you still made money. But at least you scaled out 5 pips apart on the way out. Now, it's just a bottomless pit of arrays you could place. And this is when I think people get overwhelmed. They're like, well, God, you got fucking 80 orders in there. They're all over the fucking place. Okay. But what if you had 2 tickets in there? You'd have to be so fucking dead on. That's why there's the cry for Gartley patterns, level 8 trading, ninja charts, as he says, I'm never sure where to draw them, the lines. But see, this really wouldn't matter. If you were literally a pip guy, you wouldn't care. The other guy says, nor me, but I'm seeing interesting results. But those results would be if you had hit the target. This guy says, still working on my 1-to-1 ratio. Now, that's dollar dependent, too. Then the other guy says, all you need, in my opinion. They do work well. That's like AA works if you work it. Here this guy says, talking about hedge strategy, yeah, that's actually the way to go. You can profit from the trend while fading it. If you stop out of the trade, you had at least the opportunity. So the fear of missing out would be part of that trade plan. So you cured that in a hedge. Works best with at least 3 targets. Yeah, because you got to get that first one out of the gate. What time frame? The guy asks. In my opinion, best way of trading a range: long on the low, short on the high. If you have confidence, let one stop go out. You'll always have the opportunity for profiting from the market leaving the range. Well, this depends how tight. If you're entering a stop or how tight a stop you're in, that's all going to matter. That's why I'd say at least 3 or more tickets. Time frame doesn't matter to me. The patterns are all the same. Okay, well, it would on the 5 minute, or the 1 minute, because now you're going to get triple bottom and the spread is your obstacle. It does matter for the spread. You're not going to get you get double bottom on a chart. You might have to go to the half hour to get a clean double bottom, whereas that double bottom on the half hour is going to be like a quintuplet bottom on the 5. Could never get my head around hedging. I know what hedging is, but not sure how you would take profits. Well, you typically got to put really good ratios in there, because you might lose a leg off. If you put a market hedge on, you're going to lose a leg guaranteed. If you put a breakout hedge on, so you put a buy stop above, sell stop below, you're probably better off, but then you're overpaying because you're getting in on a stop. You're chasing a little bit. And you also have the chance to get whipsawed and get filled on both stops, and in the end lose more. If you bought the market simultaneously and sold the market simultaneously with tight stops, what you're saying is that, okay, these are kind of scalps built into a hedge of a bigger order plan. Way more orders than that, even. More orders, and densely populated in that zone. So if that makes sense. But I think you realize that you can't there's no free lunch. You could close the whole long position or close the long position partly open and short so you're hedged or net short. This allows you to stay in the trade longer, which could be profitable or break even. The one open short position to profit from the short opportunity. So you have basically two different trades. The same logic could be applied to adding profitable positions. Okay, without talking about scaling in and out of that, it's pretty tough, right? And you'd really, to optimize that, you'd have to look at the dynamic range of the current situation, the ATR, or the true range of each bar, and build your stuff to that spread, to that breakout. If you're going to hedge, you'd want to hedge breakout. When the market's moving, okay, you're probably not even going to realize getting in a hedge, because if you have buy stops and sell stops in a moving market, you'll only get filled on the direction it's going. There's another thing. You can run a hedging strategy. If it's a breakout hedge, you could run that and never get filled on the other leg. That's the funny thing about trading, is that you could take a trade plan that's a hedge plan, and the market would turn it into a trend trade for you by never backing up. And this happens. Where you put a buy stop and a sell stop, and this is non-directional breakout trading. If you put on a true hedge and lock it in, you're still making money if you got tight stop on your wrong leg. Because if your right leg is triple the money, your wrong leg is losing on 1-to-1, you're doubling your money, because you're always paying to get stopped out of that. If you chase the market, in essence, with buy and sell stops, confirming upon it cutting through and thrusting through your price, your fill, then the tightness of that stop for that entry order is going to matter. And the target's always going to matter. Well, when the momentum dies, that's why a lot of these burst moves make money and then the market just dries up. And if you're only used to trading volatility, when it dries up, you're going to start losing from getting caught in things that get choppy. So the market only has one wave three to it. It just bursts. I mean, that's the only thing about Elliott wave that makes sense or is easy to identify. What's the biggest wave? Yeah. Why should this work? It's just moving average. So price day overall. Yeah, moving average of the price day is just an excuse to trade, I think. It only works. The only difference is what I'm trading now is across the EMAs. Tells me when to draw the DNL. Okay, so you're just putting a filter on. So people do like this. I hate rules, and I've always just hated it, I think. Hated it. It's too constricting, because I'm really just, like you can tell by the way I'm tangentially thinking and talking. I keep changing in midstream. So I don't have a very good follow through. But it doesn't matter, because it's not critical stuff. Now, if I'm doing a process where I need to paint a wall or something, or build something or do painting or something, I'm stuck with the rules of physics there. I'd have to wait for something to dry before I put another coat on. If I'm driving my car, check the pressure in the tires. These are real concrete things. The market's so full of flux that you have to be the ruler. You have to be the rule. The rules are like, okay, 12 pip stop. That's a rule. That's a great rule. There's the 18 pip stop rule. And all these rules coexisting simultaneously is, to me, where it's at as far as the stability and the robustness of that approach. Where I have a trade plan for a 1 hour trade and a 1 day trade. I think that's the thing. So much in this thing, real time, people are typing. that's always a trade-off. Yeah. So there's trade-offs. Nothing's a perfect world. So I'm going to post this video. Hopefully my internet's back up after I rebooted it. Okay. And that's what I'm thinking. So good luck with that. And say hi to all the level 2 guys for me and level 9s.